All right, everybody, we're going to start it up here with the silver panel. Just a quick show of hands. How many people in the room are stacking physical silver? Who has any physical silver? Okay. And then just out of curiosity, who has at least one silver stock? Great. So we're going to dive into silver, but we're not going to belabor the point with the physical metal itself. But I will have each of our panelists, and we're joined today by Sean Thompson with Blackrock Silver, Shawn Howarth with Excellon Resources, and Galen McNamara with Silver47. I'm going to ask each one of you to weigh in on, are we still in a bull market in silver? And here's why I'm asking this question. In January, I think we all saw silver spike up to triple digits. A lot of people think that was maybe the top because it crashed back down to $64 just shortly thereafter. Then it rallied up to about $90 just a couple weeks ago, has petered back down again. We're still at a really solid silver price, but a lot of people are saying that's it, the silver bull market is over. If it's not over, what fundamental or pricing reasons or sentiment reasons would you give as to why we're still in a bull market? Galen, we'll kick it off with you.
Sure, yeah, it's been, I have to flip the switch. Okay, thanks for the tip. I think, thinking about that, I always come back to the gold to silver ratio. Like right now, it's still like 60 or something like that. But the ratio of gold to silver produced in the world is something like 7 to 1. So, and then historically, I think we're looking at 15 to 30 to 1. So I take that pretty, I like to study history, at least the best I can. And I look back at previous cycles and previous bull markets, and I don't think we're there yet. I really don't. Perhaps when we start to see it get down towards 30, which would be at least intrinsically a double from here, only relative to gold, assuming gold doesn't continue, then we might start to think, okay, let's, at least from a PA perspective, a personal account perspective, shape some positions.
Yeah, probably similar to this panel. I share a personal view is a longer term. We are just entering the bull cycle. Caveat that with, at Excellon, and everyone here will say the same thing, that we plan for the downside, so we'll do our resource modeling at $35 per ounce silver. But I look at the last 18 months, there's been over a dozen calls on the COMEX, on margin calls. So basically reallocating portfolio. This is what broke the Hunt brothers in 1980. This is the structure that they were trying to reset. And what you would see in overnight trading is the Shanghai exchange would continue to bid it up. Paper trading, in my mind, is gone. It's going to the physical demand, and why is that? And that's why we look at Shanghai at an $8 premium. And you say, okay, well, solar build-out, infrastructure build-out, about 500 ounces of silver is required in every installed megawatt of photovoltaics. In the next 5 years, there's 3,500 gigawatts of photovoltaics. That's about 1.5 billion ounces of silver. World production is 800 million ounces of silver right now. So that's just one piece. I look at the data center build-out. I think it's interesting. There's 5 to 10 grams of silver in every substrate of a chip. Works out to about 1 million ounces of silver in like the Elon Musk Starlink, I think, Stargate build-out, 7 gigawatts of power. So data center is going to have an important impact, maybe not as profound as I would say maybe photovoltaics, but I think we're entering a new world of physical demand, and that's something that's just going to continue to play out over the next 5-10 years to come.
So I look at what are the two main things that drive silver, right? You got the investment demand, and then you've got the industrial. And the industrial is what, 50, 60% of silver demand, and that's huge right now because you got the AI, you got the EV. It's the most conductive metal on Earth. The uses are growing, and the supply, we're in deficit. We've been in deficit for 5-6 years, and it's back to basic economics 101, supply demand. Right now, the demand is outpacing supply, mine production, recycling, you name it. So both those things are driving it. The world's debt situation is horrendous and getting worse by the day. That's probably helping drive some of the investment demand along with gold. I can't see any of these things on the horizon settling themselves anytime soon. And you can see continued central bank buying of gold. You wonder if, at some point silver is going to make its way into that mix too. But it's good old-fashioned economics 101, supply demand. Right now, demand is super high and supply is super tight, and we're in a deficit. So that's
All right,
my
I
take.
think some good answers there from all the panelists on the pricing, the gold-silver ratio, industrial demand, some of the trading that you see on the different exchanges. Now, we're not going to belabor the silver point. Let's just dive into the silver companies. Most people are here to invest in silver companies. We'll dig into some of the catalyst things, but just to kick us off, maybe remind people where, name your company, where you're at, your jurisdiction or infrastructure advantages that you have, and then, yeah, we'll just leave it at that. So jurisdiction and infrastructure. We'll start off with you at the end, Sean. Let's go with Blackrock.
Yeah, that's an easy setup. So I don't know if anybody in this room knows, right now we're in Nevada, which is actually the #1 mining jurisdiction in the world. It's recently retaken its spot in the 2025 Fraser Institute survey. Galen's probably well aware of that as well. So Blackrock is an American-focused, emerging primary silver developer in the best mining jurisdiction in the world, in the United States of America, at a time when the United States has designated silver as a strategic and critical mineral. Our project, along with Galen's, is right on the Highway 95 there, just cutting through the town of Tonopah. You can literally see our drills off the side of the highway. There's a power station, there's infrastructure, there's a skilled workforce. 3 hours either side of Vegas or Reno. So jurisdiction and location are huge advantages for us.
Usually I'm here on a Latin American panel, so it's nice to have actually US based. Excellon is Peru focused, near term silver restart. We acquired the Mayai mine in early 2025. This was a Buenaventura built asset, so tier 1 mining company in Latin America, specifically Peru. We acquired about $150 million in infrastructure, a working 600 ton per day mill, power to site, 18-kilometer mine access road, and about 30 kilometers underground development. We're restarting the mine, and I'd call it like a measured and yeah, but like an exciting basis. We've reopened the underground. We're doing drilling to extend out the resource where we want to continue to demonstrate the next 5 to 10 years of mine life. So. For us, the acquisition, I think we're going to get into it, was transformational because we were Mexico's silver production. We've exited Mexico, focused very much in Peru. And, on the basis of cash flow, there's probably 2 or 3 exciting exploration projects we're looking at on the property that will continue to drive what the upsize return, but in a risk-balanced basis because we're doing it from a position of cash flow as early as 2027. So we'll get into it a little more, but that's probably a high level.
Great. Well, Silver47 Exploration is a US-focused silver explorer and developer with 3 projects in Alaska, Nevada, and New Mexico. Of course, the one in Alaska being next door to Sean's at Blackrock, totaling, in terms of mineral resource endowment, to start, about 250 million silver equivalent ounces. But lots of upside from there. I'd say an aspiration for us is to start to footprint 1 billion ounces, over time. And that's my goal as the CEO, but also in my experience as a geologist, that's something that I think is very possible. So I look at our company in a couple ways. One, it's this idea of a little bit of a US in the ground silver bank. But at the same time, we've got 50 million Canadian dollars in the bank, and we're very aggressively drilling out our projects this year, will be next year for sure, as we start to push towards that goal. And the focus for us, really, it started in the lower 48 in Nevada first, and then New Mexico, is that, there's this old saying, the best place to find a new mine is right next to the old mine. So the 2 projects in Nevada and New Mexico are these historic Wild West almost mining districts that in their time helped really shape the American West. But hadn't really been looked at from a modern perspective until companies like ours and companies like Blackrock came in and did all of the modern geological and exploration work, and now we're seeing unlocking some great value and seeing some great exploration success. And then on the project in Alaska, it's a 60-kilometer long district belt of rocks that has dozens and dozens of high-grade showings on them. Only 2 of them are really drilled, and that's where our resources are. So we just see the upside on all 3 of these projects as being quite significant. And just before I pass it off, the one thing I'd like to mention is, people always ask me, why is Silver47 called Silver47, And for better or for worse, it's not named after the 47th president, I just want to say that. It's because silver is the 47th element on the periodic table. A little less exciting.
That's a nice little add-on addition there. So, well, everybody's here because they want to get involved with stocks that are going to move irregardless of the metals price. We don't know what's going to happen to the silver price, whether it goes up or down, but if you have a company with catalyst on tap that can build value, then that's what we're all here for. So what I'd like each one of you to do is talk about your next 1 or 2 or maybe 3 key value drivers that'll propel the stock higher irregardless of the price. And Sean, we'll start with you in the middle this time.
For us, the key is twofold. Demonstrate consistent measured results with a near-term silver producer. It's exciting to be restarting a past asset produced from 2012 to 2018, was built and developed at a $20 to $25 silver environment. So, we look at this as very different than perhaps the way the old mining operator did, because there's a lot more opportunity presented itself through drilling. So demonstrate measured results with near-term silver production, but longer term, it's the expansion of the resource, defining new potential zones of mineralization, the potential for potentially gold mineralization as well, and looking at this and saying that, what was historically thought of as a small, narrow underground vein mine, can it be something that's bigger and better? And then longer term, we have a project called Traceros. It's about 6 kilometers from the mine and the existing infrastructure. And Traceros we look as an undrilled surface anomaly, very different style of mineralization, but the potential for multi-million ounce gold and silver based on the outcroppings at surface. I'd say that type of drilling and that type of exploration is what leads this company in 2028, 2029, longer term, is defining a new, what we would like to characterize as a tier 1 or tier 2 drilling project. Again, walk it all back. There's nothing that's been drilled. This is just a surface expression right now, but it's incredibly exciting, and you're doing it all from this position of cash flow from the mine. So kind of a unique value proposition, not just developer or near-term restart, not just explorer, but you're playing both sides.
Let's go from Sean to Sean.
So we've already got over 100 million ounces silver equivalent, very high grade. We report at about 454 grams per ton, block diluted, which means these are actually like grades that are going to go to the mill. They're not just vein grades we're reporting. So we're very conservative. The updated PEA we released in March of this year, we did at $31 silver and $2,700 gold, so very disciplined base case economics. We did that for a reason. We wanted to show that this project can make money in any silver price environment. I'm sure everyone in this room, probably feels that silver's kind of going to stay where it's at or go higher. They don't think it's going back to $31 an ounce or $2,700 for gold. So the upside really is, do you believe these silver prices are going to stay where they are? If you do, when we run our numbers at analyst consensus forecast for silver gold, our NPV jumps from $450 million to $1.5 billion. And our IRR jumps from 28% up to 79%. So if you feel these silver gold prices are here to stay, there's upside just with that. Next catalyst, I'd say, is we're really building a foundation, a de-risked foundation for our investors, where we're moving through the permitting process. In the state of Nevada, we're on private patented lands, which allows us to have a very expedited, frictionless permitting process, if you will. We feel that we should have many of the necessary permits we need in hand by around this time next year, which is huge. And along the way, we're doing an expansion drill program, 17,000 meters. We want to see how big this silver system is in Tonopah. We're doing some big 800-meter step-out holes right now to test the extent of this mineralization. And God forbid we hit or even find some sniffs of mineralization 800 meters away. This system could be very big. So a lot of catalysts on the horizon for our investors.
Great, thank you. For Silver47 this year, our mantra is kind of like license to drill. We've got $50 million in the bank. Right now we're drilling on the other side of the Tonopah district, where we think that we're on to an extension of the entire district. This is a place that between what Blackrock's drilled out, what we've drilled out, and what was historically mined is something like 500 million silver equivalent ounces over 4 or 5 kilometers. While on our side of the district, we've got a 4 or 5 kilometer extension, and we have veins that we've intersected in wildcat drill holes on either side of that. So our goal right now, what we're doing right now, and drilling a 7,000 meter program, which can be instantly expanded, I'll say, is looking for the main structure on the eastern end of the district. In which case there, the target is very high. It's hundreds of millions of ounces. So for us, that's what's going on in Tonopah right now. But in Alaska, we're going to be drilling there in, say 3 weeks, shooting for, give or take, 10,000 meters to expand the 167 million silver equivalent ounce resource that's already there, number one. But number two, take a real shot at finding new zones in a massive sulfide district that's more or less underexplored, unexplored, except for a good amount of surface sampling that we're using to follow up on targets. And to help put that into perspective, that property, that belt, which we've got up there, is 60 kilometers long. If you were to plop that down in one of the greenstone belts in Canada, I mean, those have produced for decades and decades and decades and decades. So that's just a sense of the style, the flavor, the type of shot, the type of swing we're trying to take this year.
Good recap, all you guys. Now, let me ask you this. I asked this when we were at the panel in Washington, D.C., and everybody shifted to the defensive case. I want to basically highlight your upside case. I think everybody in the room knows that all of your projects work at much lower prices. Most people in the room and most people that were coming up with corporate slide decks were not planning on silver in the 70s or 80s. But if you look at where your market cap, maybe just tell us where your market cap is today and what your net present value would be at somewhere around spot prices right now, and what the delta is, just so people get an idea of where you could close the gap on a re-rating. So we'll start it off with you.
Yeah, that's a great question, and a hard one to really answer in a way that is serious. But I think to start off, if you'd have told any of us, maybe even any of us in this room, a year ago or a year and a half ago that silver would be $75 an ounce, I think we all would have been ecstatic, right? Now, of course, equity prices haven't really caught up. I mean, we got a flash of what's possible in December and January, which was great. But more specifically to us, we value ourselves. We look at ourselves in terms of an enterprise value per ounce in the ground. And Silver47 gets about 29 cents per ounce. And compared to many of my peers, all of our peers, I'd say, we much higher valuations are common. And I'm not saying anybody's overvalued, at all, by any means. We're probably all undervalued. But for us, I think that's what we like to point to say we've got, a good amount of catch up to do. 29 cents per silver equivalent ounce in the ground in the United States, when security of critical mineral supply is of national importance right now. We're all hearing about it in the news. I think that's something for us that makes us pretty compelling.
What's your market cap now? What would it be if you were valued at, let's say, anywhere close to where your NPV should be?
Yeah, so our market cap right now, thank you for reminding me I didn't answer the question, I only answered half of it. Our market cap right now is about 150 million Canadian dollars. And hey, we don't have an economic study out on our projects yet, right? Because we're still figuring out how much silver is there. But using that per ounce metric, I'd say we're 29 cents. Is it fair to say that an ounce of silver in the ground in the US is worth $1? I don't think that's crazy.
Anybody think it's worth $1? Okay.
Yeah, or higher. It's he's pointing higher, right?
Do we hear $2?
I'm being conservative.
So what would it be at $1 or $2 then? Triple it?
Yeah, I think that's fair to say.
3x move just to get to $1.
I think that's fair
All
to
right.
say. Yeah.
Sean?
Okay, I'll talk about the restart space. And everything I see here, just going to qualify number one. We are restarting this mine on the back of the resource estimate we published, not a feasibility study. So the information I give you is really based on what the mine had done historically. We're targeting 2 million ounces of production at 600 tons per day based on the grade profile of the ore body. I think 2 million ounce, 3 million ounce producers with a track record that demonstrate they can achieve what they want, because restarts are always complicated, take longer than they expect. You break through the other side, those are billion-dollar assets in this market right now. Avino, Guanajuato Silver is going that way, and you can see guys that have gone through that now with scale and growth, and that's more like Americas and Aya Silver and Gold. Aya was a 2 million ounce producer for a long time before they showed a great profile. So in the silver space, there are producers that get valued. There is not a lot of silver producers in that space. So when we look at it, we say, how do you play this? One option, exploration. Another option is near-term silver production. There's a handful of near-term silver producers or kind of coined themselves like that. Some are Mexico. One is Peru, which is Excellon. And they trade at about maybe a quarter of that valuation, maybe even less than that. And it's just about de-risking and about delivering on what management and the company says. I think for Excellon, we're in a unique spot that, you know, while we prioritize some of the near-term restart ability, we've reopened the mine, we're assessing what we have, we're doing some drilling. Longer term, I think that there's a growth story that comes from exploration that we need to deliver, but, you know, let's not lose sight of, like, a near-term unlocking of value is no doubt filling the mill with productive ore feed and generating production at, you know, an $80 silver price, which is accessible right now. So, and not 2-3 years from now. So that's kind of the way I look at it at a high level on a financial basis. You know, 2 million ounce producers generally around, you know, $30 per ounce cash cost. So depending on how you want to look at the, you know, the forward silver price, you know, there's significant margin. Historically, 2 million ounce producers are small. They're not really loved. At $20 silver, they make a challenge. At $80 silver, there's opportunity because there's, you know, just more margin to play with there. So, and so for us, it's like, okay, where do we take this? We want to explore, we want to develop. And to Shad's comment, if you look at that higher silver price, what is the ability to be able to find more ore or, you know, a different cutoff grades? This mine was a 2 million ounce mine because you needed to mine a really high-grade narrow vein to be able to achieve the production there. Are there opportunities to be able to find additional ore feeds or alternatives that justify the exploration dollars and the development dollars to get there? And so a lot of the work we're doing is to start to unlock or untap that value potential.
And Shawn, you've already kind of alluded to what would be at spot, but maybe do a peer comparison as far as other companies with big resources. You have a particularly high-grade resource, so how would that stack up on a value proposition?
Yeah, developers like Blackrock typically trade, if you're looking at multiples on what's called a PNAV or price to net asset value type multiple. When you get closer to actually producing, or you are a producer, it'll be a P cash flow, price to cash flow, right? So if you look at our updated PEA 2026, our after-tax NPV was $437 million. And at spot today, if you're using, to answer your question directly, it's $1.5 billion. So that's, you know, we're trading, the multiple at spot is about 0.35 NAV. As you de-risk further, as you start getting your permits in hand, which we're well on our way to through the permitting process, again on private patented lands in the best mining jurisdiction in the world, in the United States of America, that's pushing for silver, that multiple should close. You should get up to 1x NAV. So as you continue to de-risk, whether it's through permitting, whether it's through, you know, we're going to drive a development decline, hopefully by 2028 to get underground. You start drilling off your inferred and your indicated more into the measured, increasing the confidence that your multiple will just close the closer you get to actually having cash flow. So if we get up to 1x NAV, or I've even seen companies at 1.2, 1.5x NAV, that's closing the gap with that $1.5 billion valuation. Compared to our peers, I mean, if you're comparing everything at spot, I'd really have to go back and run a full peer comparable with some of our bankers and see where we sit. But what sets us apart is we're primary silver. We're silver gold. You know, we don't have any. We're not a base metals mine that's producing silver as a byproduct. Our pesky byproduct is gold. And there's very few primary silver assets in the world. There's very few primary silver assets of high grade in the world and in the United States in the best mining jurisdiction in the world. I'll leave it at that.
So here's going to be kind of a wild card question for you guys. I know that the industry loves M&A, mergers and acquisitions. I know two of your companies has grown quite a bit through M&A, so maybe you can highlight how that was a strength, and are you still looking? And then maybe one company considering M&A. So let's talk M&A and how that transformed your companies. Galen, we'll start with you guys.
Yeah, sure. Thank you. So for us, for Silver47, I think this might have turned itself off. Yeah, I'll trade you here. I might be dead. Yeah, thank you. So for us, for Silver47, we recently completed a merger with Suma Silver, and I was the CEO and founder of Suma Silver, and obviously continued on with Silver47. That closed on August 1st of last year on a pro forma basis when we announced the deal and closed the deal. I think we were between a $70 and $80 million market cap. Today we're $1.50, and we've raised $56 million between closing and where we are right now. So as a proof of concept, look, timing was great, but those are the types of things that we want to look at. Those are the types of opportunities because. Number one, bigger scale, right? Bigger scale gives you a bigger investor access, right? And some of those passive funds, we're starting to see inflows from now. We're in the SLVR as of December. But also, there's just very few, from a silver perspective, in the United States, there's very few high-grade assets of scale. Of course, Blackrock being one great example, but past that, I can count the rest of them probably on almost one hand, and we now have 3 of those assets. So often as investors, we think of supply-demand fundamentals from a commodities perspective, but I try to think of supply-demand fundamentals from a project perspective as well. And finding good silver projects is very difficult. So we're always thinking about ways that we can grow, whether that be through the drill bit, which we're going to successfully execute on and always have, to be honest, or from, hey, let's find like-minded companies and like-minded individuals that want to potentially, join the mission together. And you talk to 10 and maybe one works, or you talk to 20 and maybe one works, but I think that's always something, at least from our perspective, we want to be thinking of, from all possible angles.
And Sean, I'm just going to give you a quick little intro here. So when I first started following Excellon, you were producing in Mexico, and then kind of under a different CEO. But then when you came on board, the company had acquired a gold project in Idaho and also a large silver system, a district-wide system in Germany. And you had gone to the Explorer model. And then I think you kind of raised a lot of eyebrows when you said, guess what, we're using M&A to expand into Peru, 2 different projects. So with that in mind, how has M&A into Peru changed the company?
No question, it transformed, Shad. And the history there is that we had a strong operating history in Mexico. The mine that we were mining, Platosa, was a high-grade silver mine. We shut it down because resource wasn't economic at the market price. It is interesting to know whether it would be economic now. We're out of that, so it's fine. So for us, the acquisition into Peru was transformational. But what we had is a management team, an execution team that knew operating mines, and that was critical. So being able to keep the team and the philosophy of the board, on a near-term restart was very special to us. And I look and I say now, so acquisition was transformational. I think what you're seeing with companies now in these silver environments and these gold environments is finding assets within your portfolio and how do you daylight that value. So for example, we've got the Idaho project, 1 million ounces, 0.5 gram per ton. Really interesting project. Is there opportunity for a joint venture spin-outs transactions to create value for Excellon shareholders? We just raised 2 million Canadian on a 20 million Canadian dollar valuation for Silver City. This is the Germany exploration project. The intention there is to spin it out and then dividend that value to shareholders. So looking at creative ways to daylight value in your portfolio is going to be an increasing theme, and it's going to continue. I think a lot of other mining companies are looking at these options, not just the majors. It's getting into the juniors because there's so much value potential deep in the portfolio. So as an investor, I look for that. I think it adds optionality into something. I don't want to just buy something for one story. You've got to have what are the alternatives around that. We were talking about that at dinner the other night with a couple other people. And so looking in this market, optionality is key. And that's what we try to manage as best we can.
And then Sean, you're primarily weighted on Tonopah West, but I know you do have the optionality of the lithium claims and Tonopah North and some other things, but are you guys considering M&A as a growth strategy?
Let me take a slightly different angle to answering the whole M&A question, because I have some thoughts on this. And first, I think before we do this, we got to look at the setup, right? Like, what is the setup today in the silver space, in the gold space for M&A? And you know, you've got companies out there producing at record cash flow, record margins, right? You know, whether it's gold at, you know, all-in sustaining costs are $1,400-1,500 an ounce, and you're selling that at $4,500 an ounce. Same with the silver companies. The margins are healthy, and these are good businesses right now. And a lot of these mid-tier and major mining companies that are producing and cash flowing like crazy, they're doing some crazy stuff. They're paying dividends to shareholders. What, like years ago, we'd say, what are those? They're buying back stock. These are becoming really good businesses that are rivaling some of the tech businesses out there that are also cash flowing and have big profit margins as well. So the major thing that they got to think about, though, is how are they going to replace their depleting ore body, right? Ore bodies get mined out. And if their shareholders are looking at them saying, these are great profitable businesses, we like these dividends, we like these buybacks, we like these margins, how is that going to continue indefinitely? Because your ore body is going to run out. So they have these companies have three options. They either do exploration, which is expensive. They do further development, brownfield, that also costs money, or they do acquisitions, right? And sometimes acquisitions are the way to go. They can get a big reserve, big resource base at, you know, for a premium, of course. And then that, you know, draws back to Blackrock. You look at who surrounds us in the state of Nevada around our project, Tonopah West. We're surrounded by the who's who of major mining companies. We got the largest silver producer in the United States, Hecla's bordering us. You've got Centerra with the restart of the Goldfield, Gemfield project. Kinross Round Mountain. You got Anglo Gold Ashanti, which is on a tear up through the area. These are all, oh, that one's good. And then you've also got everyone being in the shadow of the Nevada Gold Mines, the Barrick New Mine joint venture there. So you kind of got to look at where you are, who's operating there, how they're doing, and how hungry their mills are for feed. And we just sit back and go, well, we've got over 100 million ounces silver equivalent, very high grade, very low cost, very good margins in a very safe, stable jurisdiction in the United States. And I see M&A starting. I think M&A is going to start heating up again in our space. Maybe you have to see companies produce. Like you look at like Silvercrest, right? That was a 1.7 billion takeover by Core Mining a couple years ago. The DNA of Silvercrest and Blackrock is very similar. Very high grade, primary silver, low cost profile, good strong margins. The resource size is kind of similar. The biggest difference is Silvercrest had to produce for a while to show that, you know, yeah, here our head grades are what they said they were going to be. Our production profile is meeting what we said. So I think there's a lot of appetite out there from these companies, and we'll see what happens.
Okay, final Jeopardy here. Everybody in the room's a speculator or an investor. You guys are as well. So maybe share, in addition, well, let me do this in two parts. Part one, what's your inside management holdings, stakeholdings in your own company? And then what other silver companies do you like or do you invest in, and why? Galen.
Yeah, okay, so for us, we're about 10% insider held. Is this on?
Use this.
Yeah, okay, here we go. Yeah, thanks, Chad. So for us, we're about 10% insider held. And then in terms of, you know, for myself personally, like I invest in the companies that I really know. So Silver47, of course, and things I just, you know, I understand on a day-to-day basis. But of course, you know, I do dabble a little bit in investing in other junior mining companies. And what I like to try to do is just focus on discovery investing. It's rare, but if you can catch a company when, you know, that drill hole first comes out and you say, hey, This is, say, 10 meters of 10 grams per ton gold, 100 GT, and the company's worth $10 million. Well, that's a good one, and try to buy that as fast as I can. And one thing that I'm exploring recently that I think is really interesting that anyone can do is with these new AI tools. I mean, you can they can really help you. So, I designed a web scraper that goes through all of the junior mining press releases every morning, and then spits out an email to me that has a chart that says, okay, this company hit 10 meters of 10 grams per ton, and it only has a $5 or $10 million market cap. Now that's a rare example, and I'm just cherry picking one. But if that email comes to you at half an hour before the market opens, maybe you can do pretty well that day. So, yeah.
What stocks do you like though?
You know what? Right. Yeah. Just a couple. So, I'm gonna stray away from silver because really my primary silver investment is Silver47. But hey, there's one in the gold space that I think is really up and coming. That's risen from 7 cents a couple years ago to like $1.64 I think the other day, and it was $2 just before the war started. It's called Gold X2. It's got about 8 million ounces of gold at about 1 gram per ton in Ontario, and in my professional opinion, just as a geologist, it's probably going to 10 plus, and that's it just secured a major investment from Anglo Gold Ashanti, and I think that one has a lot of room to run. I'm talking my own book, which I don't usually like to do, but to be honest, especially publicly. But the other one that I think has done again extremely well. There's a copper explorer in Peru called King Copper that again similar type of run up, 7 cents give or take to over $1. It's got some great investors. There's a hole on that was never followed up. That was something like 240 meters of 2.5% copper, give or take. In the land of giants, looking for the porphyry deposit, and that might be, a big part of that. So, that's the type of, and that's like a great example of what I think is like what a world-class hole would really be, right? So that's something there that they should be getting their permits, any week now, and then they'll be able to drill out this target that, all of us have been waiting for several months.
At Excellon, insiders management, including Eric Sprott, own about almost 20%. That would be so tightly held, roughly, given where we're at. When it comes to stories, I like all the silver sector. I generally try to own as much silver as I can. I like Abra Silver. It's probably one that I can talk about. Argentina, it's de-risking. Argentina is very different now than where it was 2 years ago, and it's going to be very different 2 years from now. That's basically the next kind of, to my mind, scale, restart-ready project and takeout candidate. And I'd say in the up-and-coming, actually King Copper is a good one, but I'd say Fitzroy Minerals, that's northern Chile. That's copper porphyry hunting, very similar. Good management team, good exploration team that's looking at that. And those are two stories that I own for sure.
Sean stole my pick. I was going to pick Abra as well. It's
you can repick it. Why do you like it?
Well, look at the size of that resource. It's massive. 454 million silver equivalent ounces. Echoing his comments in Argentina, I think, which is getting to be a better jurisdiction. And I think I agree with Sean completely. I think that is the next takeover in the space. That's a large reserve base, asset base for some major mining company. So I like that one. And I thought it was funny, Shad, I think you did a comparison of silver companies on the pullback that we had from 120 down to, and every chart looked very similar.
Everything dove down by 50, 60%.
Right. They were all up like this, up and to the right, and then just took a big drop down, found a little floor bounce, and I was like, man, these charts all look bloody identical. So, yeah, I like Abra. And we're notorious in our industry of liking our own projects. I think it's just because we get so familiar and we know the team and the asset so well that you think, oh geez, man, I like this, I know it. So Blackrock too. Leave it at that.
A solid pick. Well, I think that wraps us up for today. We ran out of time, but that is the silver panel. I think we covered silver, we covered the companies, but give these guys a round of applause. Again, Blackrock Silver, Excellon Resources, and Silver47.